Today, I want to talk about AI, RPA, technology, and how mortgage companies are implementing it and applying. And I'm going to use a recent article from the most recent Current Insights from Stratmore Group. And the name of the article is Laying the Foundations for a Seamless Digital Mortgage Experience. And it's a good article. It kind of gives us how's been the journey over the last year or two for mortgage companies adopting technology, and what's been the challenges. And it's pretty interesting, and I'll share the article in a second. But here are some key insights. First, RPA, that's robotic process automation, RPA in the mortgage industry is growing. It was only about 30% of the companies were dabbling in it in 2020. And by the end of 2024, nearly half of mortgage companies were using some sort of RPA in their process. And it's really just, an RPA is just a form of a bot, right? And they're mostly using it to streamline operations, And the number one use is, or one of two uses, ordering appraisals and ordering credit reports, just automating those so there's no button to push. It just automatically happens. I know some companies are doing title, and some companies are doing flood. They're using all sorts of ways, but industry-wide, about half companies are using RPA, and most of them are using, of those are definitely using it for appraisals and credit reports. Now, the other thing that's growing is the use of AI and machine learning. And I will say in this article, they interchange AI just with general technology, because some of the technologies they cite in the article as AI isn't really AI. It's OCR or ICR, which I don't believe is a form of AI, but it doesn't matter. The growth of technology, right? So, only about 15% of the mortgage industry was using any type of AI or artificial intelligence or machine learning in their process on their platform. That rose to 38% in 2024. So more than doubled in a year. So now 38% of lenders are using some sort of AI or ML, machine learning in their process, in their platform, right? Of the companies that are using it, 63% are leveraging AI for document reading. So that's OCR. They're also using it for ICR. And that is not, in my opinion, AI, but it's certainly an advanced technology. So half of lenders are doing that. Now, what happens? The reason why lenders are adopting these things is that they believe that automation is going to be critical for enhancing productivity. They also think that it will help manage costs. It will raise customer service. So that's why they're using it now. The challenges, really interesting, and I'm going to get into this. The top challenges is adoption and resistance inside their own company. Isn't that really interesting? And what's really interesting, where you have the highest rates of adoption is by the client. The beginning, the front of the process, that's 100% client driven. The companies that are using these technologies are getting like 85% use by the client. When it goes down to mid-process, end process, where it needs to be a loan officer or a processor or an underwriter, the adoption, the usage drops dramatically. And that's what we have to change. We have to change that. We can't be in the way of technology. So one other thing that was kind of interesting here, they talked about the top 10 live digital capabilities. And in that, they talked about how many companies have this fully built, and then how many companies are actually using it. Because there's a gap. There's companies that have the technologies and no one's using it because there's a lack of adoption. And I'll show you that in a second. So let's go to the article. I'm gonna share my screen. Here you go. Here's the Stratmore Group article. Really good. It's from the insights part. This is the first thing. This is RPA usage in 2020. 30% were using it, 70% were not. This is the RPA usage in 2024. It's nearly 50-50, so a significant increase, as we mentioned. Here's the usage of artificial intelligence and machine learning in 2023, and look how much growth is seen in just 1 year in 2024. Let's keep going down. Now, here's the perceived benefits and the perceived barriers to a digital mortgage. The benefits are better workflow, faster cycle times, enhanced productivity, increased borrower satisfaction, enhanced LO productivity, and increased transparency with the borrower. The perceived barriers are getting the LOs to use it, internal IT development capabilities, system and vendor integration requirements, and then a lack of internal adoption of new technologies. So getting the loan officer to use it and getting the rest of the team to use it are the top barriers to adopting new technology. Really, really interesting. So here's the thing. If you look at what's working, this is companies that have the technology. And what these scores are is, do you have the technology and are you using it? Well, look at what the top things are. The top things are what the borrower does. Online disclosures, right? That's when automation sends the disclosure to the borrower and they execute it. Has nothing to do with the human, so it just has with the borrower executing it. It's when the borrower uploads the documents, so they get a link and they upload their own documents. Or when the borrower completes a digital application online. All the top three things that are being used and have full capability and adoption are borrower driven. And then as you start to drop down in the process, whether it's appraisal data submission or income data service or income and employment, looking for waivers, bank data services, or automated reminders, the capability, the adoption goes down. I found that to be really interesting. Found that to be very, very interesting. So now, let's see what Nicole Young, the author of this article, let's see what she suggests given what they discovered in this annual report, which they've done for 10 years. So they have 10 years history, and they're pretty good at this. Here's what she recommends. First, start with your own LOS system. Many LOS systems like, Encompass, whatever you have, many of them already have native automation features built into it. So leverage that first. That's the first thing. Second, if you're going to try to do proprietary, if you're going to try to piece together different AI technologies, you're going to need to invest in some talent on your team. So you're going to have some in-house expertise on RPA and AI. Third, when you start with the application process, start with those front-end tools, the ones that have the most adoption, the disclosures, the uploading documents, the executing a digital app, using a mobile device, those type of things. And then also totally focus on the customer experience. So make sure you're building that first. That's the lowest hanging fruit. Now, here's the thing. The whole world of mortgage is changing. Everything is changing. The consumer is changing. Consumers want a really high-tech experience wrapped with a very human touch. So all companies have to get good at that high tech. Luckily, if you're not a big company, you're a small company, if you're an independent company, a small brokerage shop, you can rent this tech off the shelf for pretty inexpensive. You just got to make good choices. The biggest expense in lending is taking on technology that nobody uses. So you have to really get alignment with getting everybody to use. If you have high adoption rates, your company is going to win. And this is a critical piece going forward. Because while technology has largely not delivered its promises in the last 30 years, that's changing. Today, technology is, not only delivering the promises, but starting to surpass them, and we have to embrace it. One last thing, talking about technology. It was really interesting. I read this when I was listening to a Mortgage Coach Trust Engine podcast, and Dave Savage had on the mortgage leader for JD Power. He said a really interesting thing that stuck with me. He said, look, your mortgage consumers do not rate you in your technology platform compared to your other peers in the industry. They don't care how you compare to Rocket or whomever, UWM or whoever it is. They don't care how you compare. They compare you to Amazon. They compare you to Apple. They compare you to Zillow. That's how they compare you. And so lenders, mortgage companies are getting really low JD Power scores on technology. It's not because they're not best in class for their industry, it's that they don't match the customer's experience with the best in the world. And so we have to close that gap. In the meantime, we can close that gap by being overly human, giving fantastic service. I hope you found this helpful. Like I said, I put this on my LinkedIn today. You can check it out, bullet pointed out, easy to read. I also put a link to the article in my LinkedIn. I will put a link to the article below. With that, I hope you're having a great day, and I appreciate you spending some time with me.